Well, thank you to Shayar for that fantastic overview of the fintech and the payments journey and the opportunity in that space that lies open to all of us. I'm now going to try to take your minds and indeed your hearts away from this little bubble that we're living in right now. Everyone in this building, pretty much, is middle class and pretty much relatively high income. That represents a tiny proportion of the market opportunity, not just in Africa, but in the world. The really big opportunity is with the working class, with the informal economy, with the millions and millions and millions of people who are fighting and striving for a better life and who represent an incredible opportunity. I'm Wayne Hennessy-Barrett. I'm the founder and CEO of 4G Capital, the neobank for Africa. We're very proud to be sponsoring the Africa Tech Summit, and I'm extremely happy to see the incredible energy here today. I'm going to talk to you about the enormous importance of the informal economy in Africa and how fintechs like 4G Capital have a vital role to play. A role to play in helping micro-entrepreneurs on the pathway to formality, helping these abundant, robust, and often extremely profitable businesses make the transition to the formal space, where they can access services from private and government providers and to themselves contribute to an integrated and growing economy. I'll front-load the punchline. If we can move Africa's informal sector to join the formal economy, we're accessing one of the biggest investment opportunities on the planet and unlocking a gigantic amount of purchasing power to drive the sustainable growth we need as a world and as a species. These stats are both our commercial, our impact, and our customers' commercial success stats, where the return on investment of a micro business is out of all proportion to the perceived risk. In Kenya, micro, small, and medium enterprises are the backbone of the economy. They're the mom and bogas, the small duka owners, and the vast majority of businesses where we buy our food, our clothes, and our household wares. They make and sell our children's clothes and school uniforms. They run the roadside eateries that feed the busy marketplaces. They're the cattlemen and the slaughterhouse owners who turn livestock into food and leather. Each self-employed trader is a CEO in their own right. They're proud, smart, industrious, and incredibly resilient. When things go wrong, they pick themselves back up again because there is no alternative. They don't see themselves as poor. They're hustling for a better life for themselves and their families, and it is our absolute privilege to serve them. The annual turnover, on average, can be as low as a few $1,000s, with larger SMEs posting much larger sums. They can benefit mightily from the wholesale to retail arbitrage, where a fruit and veg seller will buy bananas at 12 cents per pound and sell them for 63 cents per pound or more, making a 425% markup. Nonetheless, there are challenges. They are small. All too often, they lack the cash flow to buy the inventory that they could easily sell otherwise. And so their earning potential is constrained and overall incomes remain low. With minimal data and often disconnected from official channels of representation, their voices and the opportunity they represent remain underreported. This is not a marginal space. The figures speak for themselves. Africa's finance gap, the estimated amount of financing required for micro SMEs, stands at $331 billion in Africa in 2019, and $19 billion in Kenya alone. By now, those figures will have greatly increased. But here's the thing. As investment lands in the financial inclusion space, the market size will grow by an order of magnitude as trading booms and purchasing power increases. This is not a development black hole seeking charity. This is the most exciting investment opportunity on the earth. So what is this pathway to formality? Countries need to industrialize and to integrate internally in order to integrate and compete externally in a rapidly changing world of competing models. and systems. There's a huge opportunity for middle-income countries like Kenya to avoid the high-tax, high-spend errors of the Northern Hemisphere and to unlock the huge earnings potential of their informal economies to bring them into the fold without suffocating them. The informal economy comprises 80% of Africa's GDP and much of the rest of the world too. Our youth, as everywhere, is the future. 2050 will be on us in the blink of an eye, and 1 in 4 human beings will be African. But more important than that, 1 in 3 working age people will be African. Now is the time for serious players to sit up and take notice. This is the market to get into now. And if investors and brands want to beat the rush for the planet's next big growth opportunity, they need to start moving. If the off-grid economy was formalized, that 80% of African GDP would be contributing toward better public services and quality of life for everyone. But for this to happen, there are 3 key requirements. There needs to be confidence in both government and business providers that formalization will pay off, and without having to wait for too long for that trust to be grown. Micro SMEs need access to financing for their working capital on terms that are right for them. And informal economy entrepreneurs need access to skills and knowledge so that they can grow their businesses for the long haul and manage their expansion. These 3 components deliver the integration, networks, connections of trust, and mutual benefit to deliver the explosive growth that we've seen elsewhere. So this is where we fit in. We use technology to achieve what was hitherto impossible. 4G Capital's mission is to grow business with capital and knowledge. And we do this by providing digital microfinance loans blended with enterprise training. We lend directly to small businesses and also provide embedded financing so distributors can sell on credit to the hundreds of thousands of micro and small enterprises that sell brands. Mobile money, no longer new tech, remains the key enabler for instant digital financing. But this year we're providing larger SME loans by online bank transfer too. Our tech is designed around our clients, so we retain USSD channels for feature phones, as well as developing our mobile application for ever richer customer experience. This short video tells the story. If you can run BT, please.
4G Capital is the neobank for Africa. We provide a combination of working capital loans blended with enterprise training to help micro enterprises grow.
4G has an interesting touch tech model. On the technology side, we use digital to get financial products to our customers in a way that they can use immediately to buy inventory, to buy stock using mobile payments. That whole product set is underpinned by a core banking system that we've designed with those customers in mind. So we collect just the right amount of data so that we can safely understand their business, understand how much we can afford to lend them and how much they need. And that in turn is underpinned by machine learning. So we take that data and over time we understand the patterns, the behaviours from the customer data that we're seeing so that we can right-size future financial products for them.
We're showing our clients the means on how to use the loan to transform their business. That for me is a solution enough. Changing lives, giving private banking experience to the informal sector.
4G Capital, we are for growth, for good.
So EVA, our evaluation algorithm, accurately assesses customer enterprise affordability levels using a machine learning neural network that not only right-sizes the loan amount, protecting low-income clients against over-indebtedness, but also predicts default probability. So our relationship managers, providing that private banking experience you heard Val describe, can help our clients get through the tough times as well as prosper from their higher earnings. Which brings me on to the importance of people. We like them. 4G Capital is a people-person company, notwithstanding being a fintech. So we believe in cyborgs, humans given superpowers through technology, rather than robots. Click. replacing judgment, creativity, empathy, and spontaneity. Cyborgs good, robots bad. There is a version of the fourth industrial revolution, or the 4IR, which sees increasing automation rendering humans redundant. We don't like that idea. We see technology and AI as vital in covering dull, repetitive, but important tasks where human error can cause negative outcomes. But customers everywhere enjoy really good customer service, and our relationship managers can get and action customer feedback, report on new market developments, and help us improve our service better than any bot. We also need to be seriously mindful about how we design our AI and technology. If we don't load our values and standards into them from the outset, rather than just moving fast and breaking things, there will be trouble ahead. So, what's the evidence that any of this works? Well, this is our 10th anniversary, and we've got a pretty good news story, even if I say so myself. We've grown about 80% year on year since 2013, lending almost $300 million to over 300,000 small enterprises, with an average repayment rate for an unsecured loan of 95%, without any kind of refinancing or restructuring. Clients will grow their revenue by 82% on average annually, and even during a challenger year like last year, with macro headwinds caused by wars and God knows what, and a lockdown-induced economic hangover, we still saw extraordinary commercial results for our clients and investors. 65% of our customers increased their affordability through their own business growth powered by our credit. They took over 13 loans over the course of the year. They increased their average value by 45% and increased their affordability by 55%. All of which equals responsible, resilient, and sustainable growth, even during the tough times. So here's the deal. We are a social enterprise, committed to eradicating poverty, but we're a highly competitive and commercial company also. This means we're profitable and purposeful, and by taking a shared value approach to what we do, we're helping to build a regenerative economy where everyone earns more. We know how to assess and manage risk, so you, our partners, don't have to. We've proven our ability during the most challenging times to deliver value for our customers and partners. And in an increasingly uncertain world, we need to democratize value creation from the grassroots upwards, rather than to rely on traditional top-down models where risks agglomerate, atrophy, and the status quo risks paralyzing change. Investing in the pathway to formality helps build an integrated economy, accelerates innovation, and allows onshore, homegrown value creation to bloom. Getting behind the world's informal economies to help them formalize with strength and resilience is how we can generate wealth for everyone across the planet and build a better world for the next generation. Thank you very much.